Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 30th of the 8th to Friday the 3rd of the 9th, 2021. We've written up the weekly flows to get us underway. We're going to start this video to save time as we write up the data flows and the asset classes and the data cycle. So anyway, let's make a start. Weekly, Monday the 30th of the 8th to Friday the 3rd of the 9th. That's the trading week we've just had. Euro dollar plus 87. So that means over that period, the euro dollar as an FX pair gained 87 points or pips. Euro yen plus 61, euro pound plus 11, pound dollar plus 112, pound yen plus 90, and the dollar yen minus 15. If you plug that into the formula, then you get a negative opposed driver in the dollar at minus 214. Front and back door flows mainly going into the pound at plus 191, into the euro at plus 159, and the yen is the negative rock at minus 136. Activity plus or minus 350. Right, we'll stop it there and we'll write up the asset classes and the flows, so don't go away. Right, welcome back. We've written up the asset classes. So US dollar index, basically it's you have a double top, it's thumped, it broke out, it's come back, and it's now 0.42 from the high. So the dollar weakened progressively and is now 42% off the model high. Gold should like that in theory, and it's basically come back to 0.33 from the high, so it's a third off the model high. Oil's had this roller coaster up and down. It's now half mark, so oil's 50% either way. Wall Street then, series of new highs, and it's now operating at sub high. S&P again and the tech, series of new highs, but they're operating at or near their highs. So Wall Street's slightly lagging in those terms. US 10-year, this is the price then. The price came down, the yields came up. Now then the price came up, yields came off, and now we've got a fall in price, slight increase in yield. It's 0.42 from the high. The bund, which is the European equivalent, basically is operating at 0.42 from the high as well. So we've got this like compression in yields, and they've sort of come together. The European and the US 10-year yields effectively have come together. So something to bear in mind in the analysis. Copper been very choppy. It's now come up a bit. It's 0.35 from the high, 35%, a third from the high. US steel did that break and then went soft, and it's 0.42 from the high, so it's 42% from the high. Okay, so what's going to knock this about then next week? Well, Monday the 6th, we've got US and Canadian Labour Day. So the US markets and the Canadian markets are on holiday for Labour Days. So that's Monday the 6th. So that's obviously going to lead to try it on moves with light data, particularly in the North American session. Tuesday then, Tuesday the 7th, we've got the Reserve Bank of Australia, not the Royal Bank, Reserve Bank of Australia rates decision and Euro GDP. Wednesday we've got JPY GDP, and we've got the Canadian rates decision, the CAD. And Thursday we've got the ECB rates decision. So we've got three rates decisions coming up next week. We've got Reserve Bank of Australia, the CAD, Bank of Canada, and the ECB EUR rates decision. So bear that in mind as we do the analysis. So we'll stop it there and we'll write up the data cycle. Right, we're back. We've written up the data cycle. So China has got a soft, deteriorating data cycle. The dollar is mixed. Tier 1 is soft. Tier 2 is very strong though, so that's where we are there. Germany neutral to improving data cycle. Euro neutral to deteriorating. So you've got that divergence there. Yen neutral to improving. Pound neutral to deteriorating. CAD neutral to in the tier 1, but tier 2 is pretty strong in the CAD. AUD is mixed, tier 1 positive and tier 2 is very negative. New Zealand neutral to negative, and the Swiss neutral to negative. So what have we got then? Basically we've got this mixed situation in the dollar. We've got this strong tier 2 here. We've got a strong tier 2 in the CAD as well, and we've got a weak tier 2 in the AUD, and the rest of it's neutral to up or down. So it's quite a messy data cycle, and we've got mixed signals in the strong ones, predominantly in the dollar, and in the CAD and the AUD. So that's where we are there. Just to remind you then, so let's have a look. This week then, just to remind you what we talked about originally, we've had a negative opposed driver in the dollar. So we've had dollar weakness driving this week, but only just. And the bulk of those opposing positive flows have been going into the pound. So we've had dollar weakness, pound strength, euro strength via the back door, and yen weakness. And equities have been steady to coming up, so you'd expect a bit of equity transmission there, and that's arguably what we've got. So what happened last week, to remind you, excuse me, we had pound driving the market positively at 318. Front and back door flows mainly coming out of the yen, out of the dollar, and the euro was the positive rock. So if you look at the difference between last week and this week, last week we had pound driving, and we've got a positive pound this week, so that's similar. Yen, we had a soft yen, and we've got a soft yen this week. Euro was strong, and likewise strong, and the dollar was weak. So the batting order, the biggest change really is the increased weakness in the dollar from last week to this week. So that's where we are there. So let's just do the final analysis and see what we think is going to happen early next week. Remember that you've got this this holiday in the US and the Canada on Monday. That'll make things more awkward. The dollar, the euro, the yen and the pound in the majors. Remember we've just had ADP was weak on Wednesday, and unusually for once the NFP basically confirmed the weakness with a soft NFP, non-farm payrolls. So we had dollar weakness. The dollar had come off earlier, and it's continuing to come off, and it's now let's have a look. What is it? It's the dollar index is 0.42 from the high, so it's come off 42%, and the flows, we haven't seen an obvious flaw in the dollar in terms of weekly or daily flows. We've seen it in the Asian session earlier in the week, and we were looking for a flaw earlier in the week, and the data and the whole sort of macro environment changed, and the dollar kept on steaming downwards. So we've got that situation there. You've got the euro rates decision to think about. You've got what is it? The Australian rates decision and the CAD rates decision. So you've got AUD rates and the CAD rates. So they're obviously the commodity currencies minus NZD. So that's something to bear in mind for next week as well. You've got equities pretty much at the highs. Wall Street slightly lagging. If you've got a soft dollar environment, which we do tend to have at the moment, This is quite beneficial normally to commodities, oil, gold, and more standard commodities, harder commodities like copper and what have you. Copper's showing signs of coming up, and it's likely that you're going to get this sort of risk-on scenario. So equities are likely to come up. You're probably going to find the Dow breaks new highs. So we believe next week we're going to get equities up, we're going to get commodities up. So you're going to get gold up, oil up, and all the usual commodities like copper, etc. They're going to come up, the metals, and then you're going to get FX, strong FX, but bear in mind, commodity FX, but bear in mind that you've got these rate decisions on the AUD and the CAD. So that may temper. We'll need to look how that develops during the week. So if you've got a soft dollar, you've got the pound coming up, and you've got the yen will be neutral to soft via the equity transmission. So you've got flows out of the dollar, out of the yen, into the pound, and into the euro probably via the back door. So neutral, but don't forget you've got the rates decision there as well. So we'll need to see what happens on Monday in terms of the actual Asian flows, and be aware that the markets are not firing on all cylinders due to the Canadian and the US holiday. So that's where we are. So expect a weaker dollar, a weaker yen, a stronger pound, a stronger euro, equities risk on, etc. Gold up, oil up, and etc. So that's where we think the general macroeconomic scenario is. But we'll see on Monday with the flows. So thank you for watching. See you Monday for the daily briefing.